Well, welcome in, everyone. We got a special guest today, Chapman Scarborough from Proven Reserves. He's a rising star in the uranium community and a CPA by trade. He uses this knowledge base and skill set to do deep dive due diligence in the uranium sector. He offers his services through his Proven Reserve Substack, and he hosts the one and only uranium sector Twitter space every Sunday night at 8 Eastern. Chapman, welcome in, buddy. It's good to have you.
Howdy.
How you doing, man? It's good. It's really good to have you on. I've been wanting to do this for a while.
Well, good. So have I. And we finally got around to doing it. And, we only had to install Zoom and figure that out. But yes, so we're here now. What's up?
Well, let's get people introduced to you for those who don't know yet. Your background, of course, is as a CPA. And so how have you been using this to evaluate uranium and do due diligence?
So as a CPA, my background was mostly in taxation. I've been a CPA for probably about 5 years now. I think I got my license at 30 and mostly did taxation, but that involved quite a bit of research. So fundamentally, my background is really just research skills and going through 10Ks and basically, ripping through companies' published financials and other information that they provide to the public, as well as government information websites, things like that. Mining tenement information. Those are all sort of very important things. And I kind of take my accounting background, the ability to basically read these financial statements. Hopefully, sometimes it's a bit harder than others, but and I take that and I try to basically distill information into things that people can understand. Regular retail investors is my target audience. I think, my goal is I really want to provide the kind of information that essentially, bigger fish usually would get access to, what kind of consulting that they would pay for before they'd make a huge investment. And to provide that to retail investors, a kind of a due diligence that they may not necessarily be, as accustomed to. They could do it themselves, but maybe they just don't have time. So that's what I do there. I started Proven Reserves because I wasn't finding the information that I wanted in the uranium space. So I just decided to do it myself. And I was be like, okay, well, the idea with Proven Reserves, I for some reason decided, I'm going to get a logo just in case this goes someplace. And then, there was the figuring out like what platform I wanted to do it on. And it just seemed like Substack would be a natural choice for that. So, debates on how much what I want to price it at and all the other things. It's like said, some people's like that. Some people like my mom was like, why don't you just charge $5 for it? I was like, Mom, CPA, I'm not giving away this information for $5 a month. Okay. No. But I think
you shouldn't. You actually made some waves in the uranium sector with one of your articles, right? You declared the uranium bull thesis dead. And it was a great headline. You said the uranium thesis is dead. Long live the bull thesis. And you declared Mark II. So what does that mean? Where are we going?
So the whole genesis of that was as I grew in my understanding of the market, I decided that the market had fundamentally changed. And you're going to have these moments potentially where, and I'm calling them marks. Mark 1 was the original bull thesis of what everybody's been operating under since who knows. Whenever, people started talking about uranium bull market or made a case for uranium bull thesis. Mark 2 is based upon the bifurcation of global supply, particularly across the nuclear supply chain, especially in terms of enrichment. Fuel fabrication, which is the fourth stage, is actually fine in the West. Conversion is also fine in the West as well. It's actually the enrichment side of things that we have a problem with. We have 70% of the reactors. We have 40% of the enrichment capacity. Something's got to give if you want to stop. Something's got to change, I guess, if you want to stop getting your enrichment services from Russia. So that, you know, was pretty much the genesis of Mark II. Mark III would be basically something involved in the Chinese, a major Chinese expansion. I know a lot of people think that there's a Chinese expansion, but China's pretty much kind of at the limit of actually where they could go at this point in time until they get more uranium. I'll be talking about that more in a future Proven Reserves article where we're going to be sort of lifting up the veil of the black box that is China and nuclear. Still doing a bit more research on that one, but the preliminary numbers that I have for it are that it is definitely, you know, worthy of a Mark III. Mark III could also be a major expansion in the West, but it could turn out that Mark III is China, and then Mark IV would be the major expansion in the West. But these would be the whole purpose of these marks is that these mark figures is that the market has changed in such a fundamental way that investors have to change what they are looking to invest in. So in Mark II, because we're going to basically see the price of uranium go much higher in the OECD than we probably were going to before bifurcation. I think that's actually quite fair to say. I think if you really start to think about it before bifurcation, you know, you might have seen maybe a stabilization at $70, maybe 65. And I think under this new market, you're going to see like 80, something along the lines of 80 to maybe even 95 at the top end as a stabilized price over several years. It won't be just, you know, something that just comes and goes very quickly. I think you're going to see that price, and I think it's going to stay up there for a while. We'll see. There's going to be actually quite a few suppliers this time around. So we'll see where competition takes things, but that's Mark II. So that changes the way you're going to want to invest in. So you're going to want to be in producers, because the most important thing is going to be able to get that cash flow at that higher price, particularly in your low cost volume producers. So you want that's another thing you want to realize is that you can have a low cost producer, but their cost may be essentially the same as a, you know, particularly in terms of like fixed costs. I mean, a mill is a mill, and you have to have if you have to have a mill on the east side of Athabasca and you have to have a mill on the west side of Athabasca because they're in opposite directions. Well, you know, you have the same costs there if you think about it. So there's things that I think investors need to start considering in this new bull thesis. So you may not necessarily be in explorers quite as much as you would have been in, you know, either a future bull thesis or the prior bull thesis, because the focus is going to be getting what we know we have in production. So you're not necessarily going to want to be, you know, out there in bleeding edge explorers looking for something that might be up and running 10 years from now. It's a little different. The market may not be looking for that kind of, I think they're going to be looking, the market is going to be looking for maximizing production existing with existing capacity. So investing more into Cameco, investing more into, say, a Global, even a Bannerman, getting more well fields for a Boss so that they can potentially make sure that they can maintain their licensed capacity. It's just things like that. And not only that, but also investing in enrichment opportunities. You know, you may not have actually invested in Silex because, again, under the prior case, Silex was supposed to be up and running in 2030. So whereas now Silex might be up and running quite a bit quicker because we need the enrichment capacity. Otherwise, our reactors go offline. So
right, that's an important point to stress there, because it really changes the philosophy of investing in the cycle right now. And especially as it seems most retail is kind of swinging for the fences on these home runs with the exploration plays. But your call is that, you know, the place to be is in the near-term producers, especially the low-cost ones.
I think you're going to make a lot of money in Cameco. I mean, I think people will, I think Cameco will probably get to the point where they're making a lot of money and they're paying, and they may, depending on what they want to do with their capital, be it, you know, how much GLE is going to cost, how much do they want to start putting into developing a potentially a future mine. Cigar Lake and MacArthur River are not going to run forever. So they're going to want to maybe start putting more money into a future resource. So, there is that as well. And, I think cash flow is going to be king for not only profit return, but also investor value. Because the more that you're able to, the more that the enterprise that you own a share of, multiple shares of, will be able to use existing cash flows as opposed to having to get loans or raise more equity, is dilution that, you don't have to suffer through.
Right.
So, for instance, you could have, when cash becomes king, like people, I think there's been a lot of talk about M&A going around. M&A doesn't really excite me all that much, to be frankly honest with you. And I don't think it needs to happen in most situations. There's a few mergers and acquisitions that I like, but most of the time it's like, if it's a stock deal, like, I'm not interested. I might even sell the stock if it's like, I just get out. I don't care. I don't want it. Just because, it's like, you've got two companies that had no real pipeline to any major production capacity in any real way. We're talking about UEX and Denison and UEC and all sort of fighting over, okay, well, so great, we'll have a conglomerate, multiple, just sort of a conglomeration of mines that none of which have any near-term potential to being production. So it's like, so why do I want that? Like, it's much easier if I have an asset that I'm just focused on. I like companies that just focus, they have an asset, they're focused on that asset.
Yeah.
And they're not, trying to build a portfolio of just uranium stuck in the ground.
Right.
So,
and so speaking of producers and value, you also have somewhat of a contrarian view on a big name in the space, which is Energy Fuels.
oh yeah.
And so you don't even think that they're a real uranium company.
What are they doing? Like, what are they doing to become a uranium company? Are they spending any money in developing their in situ resources or even their conventional resources? No. They've gone down to Brazil to go buy a rare earths play that there isn't even it is questionable even the value for this rare earths play. I mean, granted, they've only spent $30 million on the thing, and they're going to be working on 40. This is getting my tax background. 1099. Working in their 43-101 on those things, on that thing. But like, what are they doing? Are they putting more well fields into Nichols Ranch? No, or whatever their Texas resource is. Not really. They're not spending the money on it because they weren't all that great production in the past, and they're not going to make a lot of money on it. So I don't know what they want to be. Maybe next quarter they'll decide they want to be an enrichment company. And then after that, they can decide, oh, we're going to get into the fuel fabrication business. And then after that, they're going to want to build wind turbines. I don't know. But I can tell you one thing, I don't have much confidence that they want to be a uranium company. And I can tell you the most critical clue to that is that there was a whole bunch of companies across the uranium fuel supply cycle. Everyone was on that list. URG, UEC, Encore, Cameco, Silex, Global Laser Enrichment, Westinghouse, all of them signing this letter saying, like, hey, dear Congress, please fix this, do something. I don't know. Stop buying NVIDIA. So, and Energy Fuels was not on that list.
Right. And that seems like a big deal because, like we said, it is one of the larger names. And the narrative is that because they're a Western producer,
well, producer is a pretty liberal term there, but yeah,
they stand to gain from Western policy looking for Western resources. And so this narrative is pushing up the stock price. And you say it's a total bust.
Well, I mean, it's like $1.1 billion in a stock price. So
but don't they have a mill in Texas?
Oh, they have a mill in the middle of Utah.
In the middle of Utah, okay.
If you can give me a business case for getting me a return on Energy Fuels based on an investment of $1.1 million, so that remembers they got to have like cash flow that is going to be available to investors over that amount. I'd be happy to talk to them or look into that, but they haven't provided anything and I haven't found it. And just going through their financials, their 10Ks, it's not much there. I mean,
Mm-hmm.
look, but the good news is there are other American-based plays if you want to support the home team. And hell, even Encore. I'm not super hopeful on Encore in terms of like how much production they have, but at least they're actually putting in well fields. So, if you want an American play, stop wasting your time with Energy Fuels. I mean, look, I understand that there's some people out there that's like, okay, we'll swing trade it. Fine. Okay. The problem is that I'm not going to be the one to basically also just sort of shut up about the bad news, because eventually someone out there is going to be holding that bag, and eventually the game is going to be up on, the Ponzi. Not that I'm calling it a Ponzi scheme. It is definitely not a Ponzi scheme. Lawyers, please do not sue me. But at the same time, I mean, there is no near or frankly even long-term revenue plans for this company that anywhere approaches justifies even a tenth of their stock price.
Right. And it's quite meaningful what you're saying here, especially assuming you're correct about everything you've said. And especially as many people, especially retail, love to pile into Energy Fuel. So let me play devil's advocate here.
Sure.
Could you turn it around with a change in management?
Be hard to
Or is it
do.
a structural problem?
They have bad resources. I mean, I look, I understand why they don't want to be a uranium company. They just don't have, frankly, they don't have what URG has. They don't have the Lance projects. And even in Texas, I mean, it's very hard to say, just the quality of in situ. I mean, mining in Texas is a lot harder than people might realize. I mean, if there's like, from what I understand, if there's like gas resources on the property, oil and gas resources on the property, it's like, good luck. And not only that, but the thing is that you can't. Here's the thing that you need to understand about just even like say, okay, they've got the Texas property, fine. You cannot just like sink well fields in Texas and just sort of hope and pray that it all works out. Because as you are trying to do the mining there, like trying to do your in situ liquid injections and sucking it back up through wells, you then have your remediation costs, because you have to return the groundwater or the ground conditions as near as technically possible to the conditions that you had before that. So that creates spending obligations, and eventually you're just going to run out of money. So you can't just sort of sink a well because you think, you got a sort of a semi-nice assay on just like at some area, and you think it's going to work out. Like, not really. I mean, you have to be a little bit careful. Otherwise, you're just going to find yourself in trouble, So there's that part of it. But I think if they want to be a rare earths company, that's fine. I don't think they're a uranium company. They may even, frankly, probably make more money as a rare earths company. But I have not seen a business case presented yet for how much they think they're going to produce to shareholders for that. So it's just not an investment I can recommend. And
how about a lot of these uranium companies that are in tandem rare earth companies? There's several of them out there. I think APIA is one of them.
Oh, you mean they haven't decided what I
Right.
guess these are companies that are sort of hunting. They're bleeding edge explorers is what those really are.
But do any of
And
them actually have anything worth chasing, or is it?
not typically, no. Some of them there are explorer plays that are perfectly valid, mind you. And they have active drilling programs. That's a big key for me. I want to see an active drilling program, and I want to see it in an area that has a reasonable chance of actually turning up something interesting. but a lot of these, it sort of reminds me of, things that I think investors are going to have to watch out for, where all of a sudden you're going to have gold companies that are renaming themselves to uranium companies once the uranium price goes to like $80 or $90 a pound, because that will happen. I'm sure everybody's been prophesizing, and I believe that it probably will happen, that you're going to have these companies that will sort of pop up out of nowhere. And I think this sort of, this, I guess you'd say the tough love approach that I have to companies now is going to, and learning the way that maybe I see things and subscribe to Proven Reserves, and seeing how, because I had an article where I pretty much just dragged Energy Fuels through just the proverbial due diligence mud, and it's just like,
So,
so
do you think that this is a problem in the uranium space broadly, or you think it's limited to really Energy Fuels?
Oh, I mean, there's a couple companies that are just BS. I
Okay.
mean, that, they're just sort of, I call them zombie mines, or zombie sort of companies that, they have no hope of production. There's no plans for production. They will occasionally do public offerings, but they never have any like actual exploration expenses. This is actually something I'm going to be coming out with here fairly soon, that I'm going to start actually tracking exploration expenses of various companies as they come out, like with their quarterlies, for instance. So like, how much did they spend on exploration drilling? How much did they spend on admin? Which is a problem if you're like NXE, which spends a lot on admin because they love to pay themselves a lot of money because, we have Arrow. So, there's that part of it. And just, I think, you know, giving investors a bit more information in that regard. Like, okay, this is what, they're actually doing. And it's not, it's sort of to escape the narrative, I guess, which it can be very recklessly bullish, I guess, or
Yeah,
almost
absolutely.
like dreamingly bullish, I guess. I mean, look, if you think that the shares are going to swing trade because people are going to buy them, fine, have at it. But, and I don't say don't do that ever, actually, on Proven Reserves. I just say just make sure you know what you're doing and what you're trading it for, because otherwise you might end up holding the bag. So
Right. Well, what are
um
a couple of the better names in your opinion for really the long haul?
well, which in a specific area?
Well, let's talk about miners specifically, not the
Sure. Yeah.
periphery like
Like in an
SMI.
area, like geographically is what I meant to say.
Not necessarily.
Oh,
In
okay.
your opinion, in the summation of quality, whether it's jurisdiction, whether it's proven reserves, right, whether it's management, as a sum, as a total, as a whole, what are some of the companies you foresee making it?
Peninsula, URG, Boss, Paladin. I think Bannerman will get built. Global, I'm
Mhm.
getting more and more bullish on them. I've actually just done a full basically cash flow projection for them, based on some new factors, and as well as the fact that they finished up their negotiations with the Niger government, and it's interesting. It's actually some interesting
Mhm.
points there. Um, and then I think Cameco, of course, is, you're going to make so much money. People are going to make money in Cameco. Cameco might actually start making enough money to pay real dividends. We'll see what happens. Fingers crossed. But they are up to, a 15% net margin, which is as profitable as they have been since like 2011.
Mhm.
Cameco hasn't been profitable in like since 2015. I think they went out of profit in 2016. And this year was like the first 2 quarters of profit in a row, I think, in a long time. So I think NXC is going to be interesting. Um, this is going to be something that's going to come up here in the next, I would think the next 2 years of this market, because in a lot of cases, because of Bull Thesis Mark II, and the fact that we are going to actually have to develop these mines now. We don't really have a choice, because one, you never know when Kazakh proms or Kazakh pounds, there was some tweet from Dmitry Medvedev, or however the hell you pronounce his name, that once they're done in Ukraine, if they have any army left, they're going to turn their attention to Kazakhstan. Like, okay, that's cool. Not bullish on uranium, or not bearish on uranium, I would say. So, the next big thing that's going to come up in uranium is going to be investor tolerances for just how expensive these mines are going to be.
Yeah.
I think a lot of people, that's something that hasn't entered the conversation yet.
It's a big deal, and you're right. And it's headed that direction. Right.
I mean,
the question is, does the increased cost of all these mines coming, does it result in higher uranium prices? Because the higher prices will be necessary to get them online.
I think the higher uranium price is going to just be a function purely of demand. Like, you're just going to need more of it, and the price is going to go up. In order for, I think, what you say to happen, which is that, and to be fair, what a lot of people are saying going to happen, is that you're going to have essentially existing producers, near-term producers, fully contracted out. And then you're going to have utilities that are going to near-term producers that are, let's say, shovel ready,
right?
Start building a mine and start contracting for pounds. Then that is way down the line, in my opinion, because Cameco, I mean, keep in mind, Cameco is only going to be at 60% production at the end of 2024. That's their current plan anyway. And Paladin has barely contracted anything else. Same thing for Boss. And same thing
well, do we have any idea how much uranium can be produced by the low-cost producers?
Oh, yeah. I mean, we have a fairly good idea. What do you say, low-cost producers? Like,
say 60 or less?
Oh, 60. Oh, okay. Probably, yeah. I mean, you could say that would be all of Paladin, all of Boss, all of that. Frankly, they need higher prices than that. This is sort of the thing. Like, all right. So yeah, if I would say all existing near-term producers could produce for that amount, and they would make money. They may not necessarily make as much money as they should or could. And as investors, we should basically, our message to management, in my opinion, should be, hold the damn line until you get higher prices. We will tolerate it, and because there isn't going to be someone else that comes along. And so, there is, like, the difference between, let's say, global, the difference between them at, like, I think something like between 65 and $75 a pound is huge.
Yeah.
Because each additional pound that's just pure profit. You have to understand, because that's, you have your operating cost, you have your fixed capital cost, and you have a set amount that you're going to produce. So if you can just increase the price, it's just pure profit, is what it is. So you want, like, even like the difference, in a just $1 or $2 can be huge. It really can be.
I suppose what I'm trying to drill at is, could these low-cost producers by themselves meet supply? In other words, no. Okay, that's where I was going with that. Yeah. So necessarily, the prices have to rise to bring these other producers online.
Let's just say, even if you wanted to meet Western supply, you're not going to be able to meet Chinese supply if China wants to continue expanding. And there is eventually going to come come to Jesus moment here with everyone, whether they are actually about, whether it's about decarbonization or not. So if you actually want to go to lower carbon, cleaner air, things like that, you're gonna have to build nuclear. It's no way around it. And we're just gonna have to increase mine supply. Is what it is. So
So how much of the Chinese demand do we think will come from Western supply?
China has a tendency of buying mines. So I think in terms of like how much are they going to get from Australia or Canada? Well, I mean, China is we think, some people think that China is going to own a piece of NXE, and that will help pay for the cost of developing Arrow, which is going to be substantial. And I think so. You'll have some, but ultimately, Chinese supply is going to have to come from new production. So, like new mines in Africa, probably beyond Bannerman and Global. But there's when the price spikes, you're going to have people that are going to start looking for it, and you're going to find it because there's been no reason to really go and actually hunt for new supply of ore. I mean, essentially all of what we have now, there's very little actually like new discoveries in terms of like outside of Global's an interesting story. But Bannerman's been a known quantity, Deep Yellow's a known quantity, Elevate's a known quantity, Forces, which is kind of a scam, is a known quantity. So is Boss as well. I mean, these are all sort of known quantity deposits. We haven't really been actually going out and looking for something that's better, essentially. And that's actually going to be the interesting quandary that's going to come up here soon.
Well, someone who has been on the hunt for supply is Sprott.
Oh,
now,
yeah.
What's your take on Sprott these days?
So, okay, look, as a fundamentalist investor, I want to know, like, okay, when am I getting my money? And you don't necessarily have that with Sprott. You're sort of, it's a different style of investment. And for me, it's like, I try to wrap my head around it. Like, okay, how am I going to get a cash flow from this? And there isn't any cash flow from it. You're just investing in this physical supply of it. And the value of that, in theory, is going to go up. Though I still have my sort of, I hate to call it a hot take, but to me, I say, well, what is the value of an asset that you can't sell? Zero.
But don't we think that's ultimately the goal? I mean, one day they will contract that out. They will
potentially
offer it up to the shareholders.
Who knows? Yeah, I mean, I don't think while it's under Sprott's control, Sprott is not going to. I don't think they're going to sell.
I feel like they took the same angle as they did with PSLV and the physical silver. You're kind of waiting on that raid the COMEX day when there's a run on silver and there's a massive need for the physical, and then all of a sudden it's payday and the price explodes and they
potentially. I think Sprott fulfills a need in the market of essentially reducing excess supply so that things can move along quicker, essentially.
Yeah.
It's kind of a sort of cartelish like that, I guess. But it is several tens of millions of pounds that are not available to the market, which would be very useful right now for overfeed, because you're going to have, those would be pounds that would probably be on their way to the converters right now. So, but they're not. And it is a function in the market that has never existed in the uranium market. And I think it is actually somewhat important that it does exist. Maybe in my most idealist sense, it wouldn't be in the form that it takes right now, but they are successful at this. They have clearly convinced a lot of people with very deep pockets that this investment is worthwhile. So I will defer to them. But
Mhm.
for me, I am more interested in investing in the mines and investing in the fuel cycle side of things rather than I
Speaking
am in just physical trusts. So
Right. And that makes sense. And I know you're a big proponent of Silex and you've covered it extensively. So beyond the mines, beyond just pulling the
yeah,
uranium out of the ground, there are opportunities elsewhere, such as the enrichment technology
yep.
and small modular reactors. So let's get into those. Let's talk about Silex versus Centrus Energy. First,
Okay.
there are plenty of Centrus Energy fans out there.
Oh, I know.
Yeah. Uh, What would you say is the current state of things in terms of who's going to get this contract? Who has the competitive edge? What happens next?
So there is some very interesting provisions in the HALU law that no one actually has talked about yet. I'm still doing the research on it. This is sort of one of those things like I'm saying, like, okay, just you're gonna have to subscribe to Proven Reserves because it's gonna be up there in a week. But there's things in there. I know I'm gonna be teasing. I'm sorry about this, but there are things in there that basically sort of make centrist a bit of a problem potentially in terms of HALU production. I know it's like people's like, well, but we're supposed to be producing HALU through them. Like, well, okay, yeah, but DOE can have problems funding that, and it's because of some certain provisions in that law. I've had some debates with people about it, but it's something that's in there. So the other problem with centrist is that they don't actually own anything. They don't, those centrifuges are not theirs. They belong to DOE.
Don't they own the
Intellectual.
patents for the technology though? They don't
No,
really.
no. It's the patent is the patent and the royalties. I mean, they get a royalty if DOE takes the technology and commercializes it in some other fashion.
So Centrus is essentially just a contractor to execute.
They are a contractor to build the array,
Okay.
the cascade of the
Okay.
centrifuges, but they don't actually own it. Which is why they have not been making an investment case for, hey, give us some money so we can build more centrifuges, because it's not their decision. It's DOE's. DOE will own any facility that they end up operating out of, because DOE is not just going to hand them the centrifuges.
Right.
DOE will essentially, and they may be contracted to run that facility, but again, it is, the government is not just going to give that to them,
Do you expect the
because
DOE to potentially award anything to Silex? Do you think it's possible it could be split
oh
instead of?
yeah, I actually think so. I mean, I think everyone is actually probably going to get a piece of the pie.
Okay.
Because again, Urenco is actually building a HALEU cascade. They have said that they're going to build one. So why are we wasting time on Centrist? Don't know. And particularly when they can leverage the fact that they've already produced the LEU, so they can just go ahead and just produce the HALEU too, and they don't have to have an extra step in the process. So it's going to be cheaper. So they have gone on. I fully admit that Centrist has gone on a bit of a run here.
Mm-hmm.
I don't know why. There's some interesting things, like their accounting is okay. And I will say this as probably, like, don't sue me as possible, but in my opinion, just my opinion, their accounting is essentially, it pushes fair presentation to the absolute mark. And what do I say by fair presentation? Well, fair presentation is a term that means that, as if you are publicly traded and I give you a copy of our financial statements, a copy of financial statements for a publicly traded company, it has to be a fair presentation of the accounting GAAP standards for the company, or a fair presentation of GAAP accounting for that enterprise. And they kind of push that right to the limit. because a lot of like how they make money, what their future business is going to be like, it's just very hard to understand. And I'm a CPA, and I have a hard time. Their books, I can go through any other companies. I have no problem going through the books of any other company and finding out what exactly is going on. Centrus will leave me puzzled for days. I mean, that's just how crazy it is. It's hard to describe just because I can't. It's hard to sort of like, like reconciling the cash flow statement to the balance sheet is difficult, because there's no like inventory seems to go all over the place. They have different inventory kinds of accounts. It's just, I don't know what the heck is going on there.
Well, let's ask you this
So,
question. Let's say that the pie was split 50-50 between Centrus and Silex. What kind of structural advantages would Silex have to deliver the end product?
oh, well, I mean, because Silex they have guaranteed supply for one thing, because they
Okay.
can just re-enrich the depleted tails, and they can do that because the lasers are very efficient at that. And they can do
Explain
it.
that for people who may not necessarily understand what you're talking about. When you say they have available supply, what are you referring to?
So you have the depleted tails at the Piketon and the Paducah laser, or formerly gaseous diffusion plants. So in terms of enrichment technology, gaseous diffusion was like maybe 1.5. There was another one, I think it was electromagnetic or something or another. It was like a little spinning thing that had like multiple operators. It's very labor intensive and very expensive. But then you had gaseous diffusion, where you take the UF6, which is a gas at above like 40 degrees, 50 degrees Celsius or something like that, and you are sort of pressurizing it through. You have to pressurize the gas, so you have to keep the whole thing pressurized. So it's very power intensive because you're running it through like hundreds and thousands of sort of cascades of this, where you're like progressively sort of enriching it as you run it through these screens, because there's like little teeny tiny holes, and the slightly which the U235 atoms, which have a slightly less weight, go through those holes a little bit quicker. Then you have the centrifuges, which make that process a lot more efficient. Okay, so you're like having a 10x sort of efficiency gains. Well, lasers are pretty much the same thing to the centrifuges as the centrifuges were to gaseous diffusion. So the thing is that once Silex is built, they will be sort of an unstoppable juggernaut. Actually, what will happen is that no other centrifuge plant, at least in the West, that can be supplied by Silex will be built, because they just won't be able to compete on the cost. And the price as well is set by the highest cost producer. So Silex is going to be making a ton of money because they're going to price it. They're going to price their enrichment beyond maybe some discounts here and there to get people on board, to get them to sign up. But then again, you already have Constellation, you already have Duke that are looking and saying, "Hey, yeah, we like this. Let's see where we've got." And granted, their memorandums of understanding, not binding contracts. I get that, but once you get that started, they will just slowly but surely they will expand capacity until they are the de facto standard. This is why Cameco owns them.
Right.
Cameco is like, they will become the Tenex of the West, essentially.
Do you
Of the
factor
OECD.
in Silex when you evaluate Cameco?
Yes. I mean, I haven't totally like factored in, what their portion of GLE is going to mean for their bottom line, simply because it's like they're already. I just haven't got that far yet.
Do you think it
And
might be priced in, or is it something the market really doesn't consider because these are standalone entities?
priced into who
Cameco.
right now?
Mm-hmm.
No,
Okay.
no, probably not. Cameco would probably be maybe a $60, $70, $80 stock if they have a full fuel cycle thing, because
Wow.
they can beat everybody on cost. I mean, they'll be
That's a big
they
deal
would
what you
be.
just said.
Yeah, I know. But I mean, Cameco is only like a $10 billion company now.
Mm-hmm.
I mean,
That's a good
in
point.
our little space of where, we have our little teeny portion of the market here, because it's like like Occidental Petroleum is just alone, and that's a mid-major for the oil industry, is as big as the entire uranium industry. It's sort of
Right.
like, woo.
Right. But it's like Rick Rule says, they're also substantially more profitable. So,
Yes.
but the question is, can Cameco ever reach that level of profitability?
Oh God, yes.
Okay.
Yeah. See, the thing is, like, Cameco has the best resources in the world in terms of, high quality, low cost production outside of Kazakhstan, which, they have to go through. There are advantages to in situ, but Cameco can produce a pound for $20. And instead of having to sell pounds for 35-ish dollars, now they're going to be selling pounds for 60, 70, $80. So this is sort of the Cameco that I think you could say the Cameco that was promised to everyone. The Cameco that's, we're now going to finally see this this juggernaut
Right.
that like I said, I called that post the Saskatchewan Uranium Empire Awakes from a Long Slumber. And because it is true, it's exactly what's going
It's
on with that.
exciting.
Oh, it's very exciting. I mean, I would say any uranium investor, 25 to, depending on your risk tolerance, 40%, maybe not 50, 25 to 50, if you're to 40% of 25 to 40% of your portfolio should be Cameco. Just because, I mean, you are assured of a return there, almost assuredly a double at least. I would say you're looking at probably, $45, I would say, is a pretty fair price once they're really into production. I mean, you have to realize they have barely restarted MacArthur River, and they're at, not, I think they're at like 40% of their capacity right now. And even with all the money that they're spending to bring MacArthur River back on the line, and keep Cigar Lake in production and make sure that that's going swimmingly, and getting Key Lake back up and running, they are making more money now than they ever have in a very, very, very long time, and we're just getting started. So and I think they have a really good plan. I think they are going to be, I mean, they are they're going to be making enough cash flow to the point that they're going to be able to buy people again finally. So we'll see what happens there. I mean, it's I'm very bullish on Cameco. It's not, you're not going to make like, I don't see, okay, a 5 to 10x is probably not in the cards, but if you want something that is going to be a good, stable, foundational returns that you can use and move those into other investments that might have like a 5x, then it's a place to be, because Cameco may just continually going up. They might be paying good dividends, and
Right. The dividends.
that's going to give you, they might start paying a dividend. I mean, a real one anyway.
Well, if they get as profitable as Oxy one day, I mean, that's almost feels like it's in the cards.
Well, they'd have to. I mean, they've actually talked about, because they're sitting on a ton of cash, and they're about to get, and they should get some more because they've won their case against the Canadian Revenue Agency's the tax man. So they're due about, I think something like $1 billion, something ridiculous. It's a lot of money. I think it's less than that. I think it's like maybe 700-800 million dollars, something like that. And they're due that money. And they're already sitting on like 1.4 billion. And they've said that, hey, if we don't have a use for the cash, then we'll give it back to investors as a dividend. But they do have a use for the cash, and that's going to basically be, this is the other thing about Cameco. Cameco has brownfield sites. They don't have to go and find greenfield mines. You know, they've got production that they can, or they've got production potential reserves basically that they can bring into production if needed, and start to basically develop those resources. So they are, you know, they don't have to go out and like explore and find something else. So they are in, you know, they are in probably the best position in Canada, without a doubt.
What are the odds that they acquire the other 50% of GLE?
Well, they won't acquire the other 50%, but they might acquire the other 25%. I see that as a likelihood. It depends on, you know, the problem, we don't know what this fair market value actually means. So there's a question there. There's also the question of, you know, okay, if it's a funding question, because all of a sudden, if you acquire 75% of GLE, then you're having to pay for 75% of the capital costs. So there's that. And they may not want to do that, you know, when GLE, frankly, has never diluted before. So there is some, they could just buy Silex. I mean, that might actually be the easier route. But, you know, we'll see what happens there. But whatever they do, it will be an offer for cash. So, because that's just how Cameco does things. But I do see it I think it's very likely that they will attempt to grab an additional 26% of GLE, which is what they're entitled to under the current agreement, which take them up to 75%. But even as a Silex shareholder, you're still getting a 7% top line royalty. And you have the benefits of this silicon stuff that they're doing, which is, I consider just to be the bonus. And as well, you know, eventually Australia is going to wake up from their anti-nuclear, you know, stupor one day and, you know, be like, okay, yeah, we've got to build nuclear here. And they're going to have an enrichment facility in Australia too, I'm sure.
So you had mentioned when Silex comes online, how long until they are online? And is there anything standing in their way to do it? Do they need anything? Are they waiting on any answers?
I mean, as far as I understand, the technology is ready for prime time. It's really just a matter of getting the orders in and essentially what Cameco wants to do. I think there's also the effect of what DOE wants to do as well, because DOE is probably going to be supporting this in some way, shape, or form. So in terms of like the barriers, I don't think that there's not a lot of technical barriers. There's only really the financial ones, like where's the money? And then you have some licensing that would have to be done. But licensing an enrichment facility is a lot easier than licensing a reactor, because you're not dealing with any major radiation potential or anything else like that. There's nothing that's hot there. You're just basically taking some uranium and you're turning it into more uranium.
Right.
So, you know, it's a we'll see. I mean, I think if you started everything tomorrow, you might have something by the end of 2025. But being that, you know, we seem to be all sleepwalking into this right now, probably 2026, 2027 would be when you start seeing an additional capacity. I think Grant Isaac said that he doesn't see any, or is it Grant Isaac? I think, let me look at whoever is Cameco. Why did I say Grant Isaac? Let me make sure that's right. He didn't see any additional capacity in terms of enrichment until 2028. Now, he has an incentive to say that because he wants more people to buy more uranium for this overfeeding that we're going to have to do. So I get that. But yeah, Grant Isaac. So, and he may be right in that, you know, what exactly how you define significant capacity is sort of up in the air, because it's like, okay, it's significant capacity, like, you know, enough that we're not going to have to be overfeeding anymore. Enough that, you know, it's actually going to be just slightly more than, you know, what we're having now. Is that significant? So how you qualify significant capacity is a 30-minute discussion in itself. So there is a question as to just how long it's going to take. Yeah. you know, um, they seem to want to be pushing up the timeline. I think the most realistic expectation is late 2026. The absolute earliest, probably late 2027, is when they would be up and running and spinning.
Okay.
So well, they're not going to be spinning when they're, when they're going to be blasting. Not really blasting either, just like, firing the lasers. Anyway.
Well, that gives a
So
lot of perspective. I mean, it still feels very early in the entire sector broadly.
yeah,
Uh,
very much so.
and so let's touch on that. What do you see as far as your timeline? I mean, it's a popular question. What inning are we in? But
Oh God.
what are you looking at?
I think I think the we're singing the national anthem right now.
That
No, I mean seriously, I think we're just singing the national anthem right now. I think the
Okay.
rules are they may have just finished up with the rules, but I mean major contracting just hasn't started yet. Yeah, you might have a lot of pounds contracted this year, but I don't think people are. I know that a lot of the smaller utilities are good through the end of 2023. So they're going to want to be starting to get at least, they might secure enough pounds for a year, let's say,
Mhm.
and then maybe do something longer term once they figure out, what the final enrichment situation is going to be like, and what their actual pounds are going to be. So they may be ordering like a lot of pounds now, but maybe it's not quite sustained, so it's hard to say. I mean, it's so opaque. It's very we've heard of some pounds coming out of Australia. I think those are all 4 Mile and Olympic Dam, and because we know that Boss hasn't done anything yet, so it's got to be those two. And it's in line with what their production would be, because there's so much uranium at Olympic Dam, and BHP just wants to get rid of it because it's like a waste product to them. So those are the cheap pounds. I would say that the cheap pounds are gone. And that you will, it's not going to be like it's not going to happen. It may not happen all at once, actually. There might be just something sort of slowly but surely, like, you'll have someone like a Boss will come out and say, yeah, we've contracted for $65 a pound. Then the next guy will say, we're doing it for 70, and then 75, and then somebody will come out with 90, and then that's going to be the day that every uranium stock goes up 20%, because it's going to be fun, because somebody said, oh my God, we got $90 a pound. Like, oh shit. I think, I've been thinking that it's going to happen like within the space of a week. I'm not so sure about that. I think I'm kind of revising myself a bit there. I think it's going to be somewhat slow and steady,
Mhm.
and it will get there, absolutely, and it will be. I think we're going to settle probably about $85 a pound. I think is where things are going.
Okay. All right.
I think that's enough for to make all of the existing near-term production happy and make a lot of money. And it's also enough to incentivize new production. So particularly quickly, you know, you're going to have a uranium rush. Like, we're all going to be singing that uranium jingle. Like, I got me a guy, kind of whatever the hell it is, however the world
All
that
right.
song went.
Well, it
But
does seem like the fundamental situation is there in uranium. You have the structural deficits, and you're also getting a change in the narrative now. I mean, people are kind of coming on board with uranium. You've seen a lot of reactors get saved. You've seen some regret in Germany. With the winds in the sails, what's to stop us? And with so much wind in the sails, why aren't we further along?
well, we're not further along just because, we're in the middle of we have a lot of supply. The uranium that's going to be refueled, that's going into reactors now, if it's going into reactors like in Europe, this is around the time that they refuel their reactors. That supply is probably there already, so there isn't a huge impetus. I mean, just never underestimate just how little the utilities actually may be keeping track of things. I've heard some interesting stories about fuel buyers. One of them was actually, I believe, it may have been for a Canadian company that was told about the whole cycle and what's happening, and they apparently went out and secured like 4 years worth of fuel, like fairly soon after this.
Wow.
So never underestimate, that maybe the utilities actually just don't know what's going on.
It wouldn't surprise me as a
Um,
Texan who gets their power from ERCOT. It wouldn't surprise me to see a lot of
I mean,
negligence.
it's like everyone just assumes, well, like ERCOT, well, the wind's always blown and the natural gas has always arrived. It's not gonna be a problem until it is. No, it's like they don't have to worry about these contingencies until they're actually a problem. It's a bad way of planning and a bad way to run things, but it's just how things are done occasionally. I mean, look, for most fuel buyers out there, I think it's not going to, until you get a company like a Southern or or some of the Southern's getting up there, but Southern is known for liking Kazakh pounds. Until you get some utilities that are all of a sudden realize there's actually no enrichment left, and now they're having to have emergency meetings because they have a little bit of supply, but they have like a year, and all of a sudden they're going to start raising the fire alarm, and that just hasn't happened yet. And it will happen eventually, I think, just because of just how colossally mismanaged this situation feels like it is being managed. So it just seems like there just hasn't been a utility that's panicked yet. And once you get one utility that's panicked, they're all going to start panicking, because it's like, oh, wait a minute now. We haven't ordered our fuel yet because we haven't even looked into this situation. Because they may not even have a fuel buyer. They might have a broker that they work with. And the broker's been sending them emails that have been just ignored. Because it's just like, oh yeah, the broker's emailing it. It's talking about. Then it just opens up the email sometime later, like, oh crap. This is the quoted uranium price. So things like that can happen. And I think, I would just advise people to just have some patience. All of these companies, if they are going to be producing, I am confident that they are going to make a good return on investment.
Right.
The game for, I think, uranium investors now is watching the market and getting a good investment that's going to be a producer that's going to have cash flow within the next 3 years, at a good price. That's what I think investors really should be worried about, rather than trying to do what I do, which is rack my brain over just how much inventory is left or something like that. Like, I've done that for you. So and I can just tell you it's gonna happen soon. So
I sometimes wonder if we have problems baked into the cage in the future, because let's say we decide to go full nuclear now and build reactors and increase base load. If we
sure.
react too late and we have suddenly a talent deficit, and we lack the contractors, the engineers, the project managers to start getting these things online in any kind of a timely manner.
Oh, that
And,
exists. Yeah,
yeah.
that exists.
I mean, don't we lack the
that's going
technology
to
to build
happen.
those tanks?
What do you mean? You mean the pressure vessels?
Pressure vessels.
That's what you're talking about. Well, we can build the smaller ones, but the big gigawatt size pressure vessels, we have lost that ability to do, and have not had that ability for several decades, I believe. We have to buy them from Japanese now, which I think is where the EPR pressure vessels come from, is they're made by the Japanese. If we start building a lot of gigawatt size pressure vessels, I'm certain that US Steel or Nucor, one of them, will probably look into getting that casting ability back again. But that's going to take some major investment. And I don't know how much kind of investment that would be. Steel is another thing that I'm interested in that I just haven't quite had the time to start really doing a lot of major due diligence on, simply because, steel is steel, and it's like, well, you need a lot of steel when we start actually building things, and it doesn't seem like we're actually doing anything on that front for the time being. But at any rate, yeah, we do have a talent gap there. And I mean, I'm sure there are plenty of, I wouldn't say talent gap. We have a lot of very smart people, but we have a lot of people that just haven't had the experience in building something as complicated as a nuclear reactor, which
Right.
is,
I'm afraid we have them in quantity.
yeah. What do you mean by that? Quantity? Like there's too many cooks in the kitchen, I guess.
No, not enough.
Oh,
I'm worried that we'll get to the point where we decide we want to go nuclear to a great extent, and we will lack the talent to do it at scale. We'll
oh,
build
yeah.
one or two, and it'll take a decade. And
I unfortunately have to agree with you on this one. And I try to sound the alarm on it as much as I can. And it's just something that is unfortunately not talked about enough. Simply because, either if we're in the advocacy side of things, we're either just trying to keep a plant open.
mhm.
Um, but I mean, nuclear, the hindrance to nuclear's build out is there's never a single factor. That's the problem. And everyone tries to simplify it down to a single factor, and they can't. Because, well, they try to, but it won't be correct. So for, a nuclear build out, we there was a recent survey that apparently came, I think it was in Power Magazine or something, or I forgot what it was. But essentially, they surveyed utilities, and they said that the utilities were thinking about building, adding 90 gigawatts of nuclear to the U.S. grid. They're starting to look at it, but this will be in the form of SMRs most likely. And SMRs are great, but the thing is, like, when are we going to build the damn factory? I don't know. I keep on telling people, like, this is my perspective on these things. Like, you have to build the fucking factory. Pardon my French there. But it's like you are not the okay. So for NuScale, let's talk about SMR. SMR, the reason that they were able to basically get funding on Wall Street was because they said to Wall Street, we're just going to be a cheap, low-cost designer. We're going to be the Apple of nuclear. Okay, well, Apple has a great supply chain. And not
Yes.
only that, but Tim Cook is like the master of supply chains. Like, so they have people that really understand that. Like Tim Cook was I think he was a just-in-time inventory expert. Like that was his field. So consequently, Apple didn't have to have production. Apple actually used to make some of their own stuff. They got rid of it because they didn't need to anymore, because they were supply chains, there was such a robust supply chain for what they were building, and it wasn't a problem. So I don't think that exists in nuclear, and I don't think it's ever going to exist in nuclear. And I think the only way that, it's like manufacturing cars. At the end of the day, you have to have your own assembly plant, so you can have a whole bunch of parts there. Like you have a whole bunch of radios that go in the car. You order those from somebody else, yes, but you do the assembling and you have a surplus of those parts. So that why, even though you're having to pay a little bit of extra money for that and keeping a higher inventory, you are able to spit them out on time and on budget. Might be a little bit more expensive, but they are going to be less expensive than if you were having to basically do what we do now, which is build them in a field, doing constant like revisions and all sorts of like, design changes, and somebody does a mistake. So you have to rip out the whole concrete pad like you did at Vogel because the rebar was slightly further apart than
Mm-hmm.
specified. From my understanding, the NRC is essentially the way that the NRC works is that they want you to build exactly what you said you were going to build. So they will make you rip something out if it's built slightly wrong, even though it doesn't matter. There's a slightly different aspect to that. Okay, so the British want you to the British regulators, they want you to assure them that that it's not going to melt down. It's going to be perfectly safe. And then the French regulators is that you have to make it safer than the last one. So this is why, they have double containment on the EPR, like 2 concrete domes in each other. It looks like one concrete dome. There's a concrete dome under that. And in the NRC, they say you have to build exactly what you told them you were going to build, because that's the design they certified, and then they could take, belief that design would be safe. So, but you have to build, if you're going to do the SMRs, and I'm a big believer in the SMRs.
Yeah.
You have to build the damn factory. Like, stop, you're just wasting time, because this is what's going to end up happening. Like, you have all 12 different various part suppliers. You've got the control systems coming from somebody else. You've got the steam generators coming from that company, the pressure vessels coming from this company, and it's like all sorts of different components. And then now you're going to like try to get all these people together and build it on a site on time and on budget. It's like, oh God, here we go again.
See, I'm glad you say
Story.
that, because I'm heavily invested in the miners, but I'm most excited about enrichment and small modular reactors. They feel more like the future, like the tech behind the scenes,
Sure.
right?
Yeah.
It feels like that's where the most potential is.
And that's where a lot of people want to invest. This is something I'm going to be saying to the people when I go to Canada in October. When I'm going to be saying to these SMR people, because that's an SMR conference, I'm going to be saying to them, like, look, there are thousands of people, thousands of investors who are ready to give you money, but you just have to give them a product, and you have to give them a timeline to cash flows, and you have to stick to it.
Yes. And it makes me wonder if it's still a little too early to invest in SMR because of, like you mentioned, supply chain issues. They haven't even built factories yet.
Well,
We need
they
HALEU. Where are we going to get it from?
Well, they don't need HALEU. SMRs doesn't need HALEU.
Oh, really?
They just run on regular fuel. Yeah, that's sort of, as a consequence of them being first. They sort of started to do this before HALEU became really the thing that everybody wanted to do.
Is that going to hurt them in the end?
No, I don't think so. I think as first movers, and they can just, as first movers, ideally, what these companies will do is, my goal plan here, if I was running things, is like, okay, you build a reactor, okay, and you have your designers. Okay, your designers like to tinker. Tinkers are bad if you want to have cost control. So what you do is you have your tinkers, designers. They are designing the reactor that you will build 5 years from now on your assembly line. But you're going to build your series 1 for the next 5 years. It's going to be like a car model. Okay, you'll have some slight improvements here and there from maybe every 2 or 3 years. You'll have a design revision slightly. But once it's on the assembly line, it's what's being made. It's going to work. We're not changing it. So this is how you achieve those economies of scale, and how you achieve the pricing targets that you're going to be able to achieve. So yes, who cares if you can make it slightly more efficient? Okay, we'll make it slightly more efficient 5 years from now, when we can make it a lot more efficient 5 years from now. So that's what, you have your designers, you team them up, and you put them on that. But you keep your designers and your factory managers separate, because they're going to hate each other. So, I would almost say to them, go find somebody from Toyota, Honda, even Ford. Who cares? Just go find someone from the automotive industry that runs assembly lines, and get them to come up with a plan for you, because you need to be designing that from the get-go. Of your reactor design from the get-go needs to be, how do I put this on an assembly line?
Yeah.
And then you start spitting them out, and then you have these major cost reductions. So imagine if I could just spit out a reactor in 2 years time. I mean, you put it on the order book, you'll have it in 2 years. Well, there's no reason to buy windmills anymore, or pinwheels for adults, or even solar panels, because I can beat those people to market. You have to fight your enemy on the field that your enemy is on.
That's right.
So you cannot have like 10-year, product lines or something like, oh yeah, I'll get you a reactor 10 years from now. No, I get you a reactor 2 years from now. It sounds great. This is where you need to go.
Yeah, piss or get off the pot, right?
Pretty much. I mean, in some ways, yes. It is it is you have to build your business to the realities of the market. And the market is that, you can order a wind turbine, and I imagine you could probably get one in about 2 years if you ordered one today. You can't do that for nuclear, and whatever you do with a windmill, if you're trying to order a pinwheel for adults, I can guarantee you can probably get them at least 5 times faster than you could if you ordered a nuclear reactor. And that has to change. So there is, and I think once you start getting like, you have to have people that have the mindset of like Thomas Edison, who was like, we will make the light bulb so cheap that only the extravagant will be able to afford to burn candles.
Mm-hmm.
And you have to do the same thing with nuclear. You have to make it literally cheap. And you could do that without sacrificing quality. I say what you need, these SMRs need to be is basically, we need to build nuclear Hondas and Toyotas. We need nuclear Camrys, nuclear Accords, maybe even Civics, a little smaller. Okay. But we've been building Ferraris and jumbo jets. And that is sort of like, it's not, particularly when you have a product. Energy has always been a mass market product, and you have to make nuclear, and you have to think of it as a mass market product. So you have to make it as a mass market product.
Yeah, get it right out of the gate.
Yes, pretty much.
Mm-hmm.
So, obviously I'm not running these companies. So otherwise they'd be doing what I'm telling them to do, what I'm saying. But yeah, that's where I think that's where it will go, because that will be, whoever decides to go down that road is going to win the market, because no one else is going to be able to compete with them. I mean, once you go down the road saying like, I'm going to build the factory, good, finally someone's got the brain right. They will be able to essentially, even if their product is not as good as something like, let's just say a company that has it's just a designer, they will beat them in much, look in much the same way Android beat Apple, really, for market share. It doesn't, yeah, Apple, you could argue that iPhone is a better product, probably more resigned, more, it's more refined, whatever else. Android still won because it was quicker. So whoever is the quickest is the winner always. So, and able to work with most people. So anyway, that's that one.
So tell us about your upcoming event here with the UraniumCon.
Oh yeah, I don't know what they're going to want to do with me. I was sort of surprised.
Pretty exciting, Chapman.
I know, it's really exciting. It's like, hey, do you want to go up? And then I started seeing the scissor reel, like uranium experts, like, okay, say so. So
well, clearly you deserve a seat. I think it's great that you're going to be there.
I think it's it's cool. I hope it's not a roundtable discussion, because otherwise I would be like, I'm gonna be sitting here just quiet, But I'm there with Doomberg. I mean, that's cool. So it's a little. He's a guy I pay for Doomberg, because I like him so much. I like them. I think it's a team. But I think it's just gonna be, I don't know what they're going to be asking me. I mean, they may be asking me about proven reserves. They may be asking, what I think about a lot of the questions that maybe we're covering today, as to where I think the market is going. And I have some ideas. I think there is the one thing that people have not talked about yet is the cost of these mines.
Yeah.
And like Global has some fairly aggressive mine cost targets. NXC, I think, is also fairly aggressive. Like, think of it this way: Cigar Lake cost $2 billion to build, and that was like 10 years ago. Now NXC says they can build their mine for 1.3. Not sure about that. So I think and I think that's going to be the thing that's going to be testing investors' patience, because you're going to
Yeah.
be essentially, at least if you're accredited investors and you're buying offerings, your your value proposition there is going to be, okay, do I finance a mine and that's going to have good cash flows, but not for 4 years? I know, we're dealing with that now. Like, it's sort of like, okay, well, yeah, but most of these mines are going to be producing for 4 years from now, Chapman. Like, who cares? Like, okay, yes, or you could be investing in the discoveries, because that's what's going to happen. If the uranium price goes to like $80-$90, you're going to see, like, we haven't even scratched the surface as to how much money is going to start flowing into the sector. Because, I mean, you could see what happens when a major discovery happens, and all of a sudden, particularly if they find something substantial, and all of a sudden it's like 10x, like in the space of a couple of weeks, if not a week.
Mm-hmm.
And that's going to be the interesting value proposition to investors, which is like, okay, do I want to, NXC is going to make tons of money, but do I want to be investing in them? I don't know. That's the thing. I mean, and I don't think NXC's done themselves any favors by how much they like to pay themselves. Management likes to pay themselves. How much the NXC management has done themselves any favors here. Because, and I could see why they did it, because it's like, if NXC was ever going to get bought, then there's no guarantee of what their compensation package would be. I think apparently UEX has negotiated for themselves quite a substantial compensation package should they get acquired, like all of their options vest at once or something like that, and they get 2 years salary. It's like, okay. So
Not bad.
no, yeah, I was looking at it the other day, like, okay, well, all right, sure. But yeah, it's that's where that's going. So
Okay. And so I think we can live stream it and follow you along, right? Would this be live? Do you know?
I think so.
I think so too. I
I think
think there's a
it,
link for it.
I think that it is going to be live. I'm actually, it's not through Zoom. I'm doing some sort of a test with them, I think tomorrow, and we'll see how that goes. Sound check and all that other stuff. But yeah, I was like, it's sort of crazy. Like, okay. My tweet on it was like, look at all these people I'm on a stage with.
No,
Look at
it's a great
me.
lineup. It's an excellent
Oh, I
lineup.
know it is an excellent lineup, and I hope that, I'm able to answer some questions. That's
Well, I think you're going to do
like,
great. And part of what I like about you, Chapman, is your unique perspective, and you offer something fresh to the table.
mm,
We talked about it on your uranium spaces before about kind of being a meta breaker, and you
mm.
tend to have fresh ideas that you don't hear too often. You're novel in your approach and your results, and I think that's worth something in and of itself. And I think it's worth
Well,
people's time to listen to what you have to say.
well, that's very kind of you, and I will say I agree. Good, this is great. I agree with this. I started Proven Res. I don't know if we talked about this, but I said I started Proven Reserves because um there just wasn't I wasn't finding the perspective that I would have. Like, no one had really done this sort of fundamentals research. And if they had, they were not making it available to the general public. Like, it might be available to someone like Rick Rule, okay? But it definitely wasn't available to you, I, or any other people in the retail space. So, I'm not a huge technicals guy. There are people that do the technicals better than I do. So I don't have charts and things like that. So, this is sort of like one of the things where, like, you know, my skills are not in reading the market tea leaves, which is technicals. I mean, that's a little bit unfair, but it's there wasn't that, like, I'm gonna drill down into the 10Ks.
Yeah.
Like, who had talked about the fact that Energy Fuels, like their Nichols Ranch and I think, is it Rosacita? I don't know. Either way, Nichols Ranch and their Texas in situ resources are depleted. Nobody mentioned that. It's on their
Mm-hmm.
10K. So there's the kind of research that I do, and I bring, you know, the ability to, look at these financial statements. And most people are not accountants, so they can't. I have to remind myself every now and then that not a lot of people actually know how to follow the statement of cash flows from the income statement and then to the balance sheet, and how these all work with each other and tell you the picture. Um, so yeah, that's, and I do try to keep it like, the goal is to basically take, you know, difficult to understand concepts and to basically make them so that people understand them. It's a little snarky
Right.
at times,
Oh,
but that is the point of proven reserves.
yeah.
It is basically, I'm in the end, I'm basically a researcher.
Well, you're taking
Um,
your knowledge base and skill set as a CPA, and you're digging through, like you said, the all the paperwork and the financial statements, and you're getting the answers that nobody else is covering.
yeah, I mean, it just is, that was the thing that shocked me. It was just like, I wouldn't say it's shocking, but there wasn't, I was just sort of like surprised, like, okay, who's actually talked about like what actual demand figures are? Because there's multiple different figures out there. Like IAEA has their own figures, WNA has their own figures. So I got a little frustrated there and like, well, you know what? I'm going to figure that out. It's like, who am I? Okay, well, I guess I'll figure it. And I came up with some fairly good numbers that make sense, I think. Um, and it's just, looking at, there are people that have helped me along. Like I'm not an expert, I'm not a geologist, but I've learned a lot, just particularly about mining in general, and what to look for, and how to, what do they don't tell you about 43101s. And even though it's like an official instrument, like, okay, well, here's what they can get away with. And just it's things like that I'm having fun doing it at the end of the
Yeah.
day. And I think, there is, I have my, I'm going to be posting a whole bunch of cash flow projections, actually, because I mean, I've got them done. NX Global's done, URG is done. um who else? I think I'm working on NXC next, and then Bannerman, once they come out with their final feasibility study, I'll do them. And because it's really, that's probably the most, I think, one of the most important things in just determining like how much money they can make. Like the difference between, like for URG, just the difference between like, I mean, we're talking like, the difference like of 150% return versus like a 36% return. I mean, that's the huge figure, just going from like $63 average to like 85. I mean, it's, URG can make a lot of money, and it's really, I think a lot of these companies do end up being overvalued. So that's really where I think the fundamental analysis actually comes in, and it tells you like, okay, if this is your investment point, like this is the kind of return that you can expect to make just on a cash flow perspective. That is only, of course, one valuation tool. You may have mines that end up getting valuated on a times earnings or something along those lines, or discoveries they find, or pounds in the ground. I mean, there's different ways that everything can be valued, but I think ultimately at the end of the day, cash flows is it's probably the best way, because I think it tends to be the most conservative in evaluation. Um, so, and there's a lot of money to be made, not necessarily in American mines, but there's a lot of multiples out there still, like several, it's usually, I would say, fairly conservatively speaking, about 4 or 5x. It generally exists, I think, particularly in global, probably in Bannerman. Boss is probably a 2x. Paladin's probably still a 2x. Cameco is a 2 to 3. It just all depends, uh, as to where things go, and there's a lot to know, just beyond like, it just real quickly, like even knowing you know, about a mining method. Like, is the mining method that they're talking about even viable?
Yeah.
I know a lot of people think like, oh, well, that's just uranium mining. We've been mining uranium forever. We know exactly what we're doing. What? Not necessarily. Because different geology is the same, or different geology is different. Sorry. Duh. And knowing, like, do they actually have a proven mining method that is going to actually cost what you think it's going to cost? Because all of a sudden, if your mining method is, if you bought a mine thinking they can mine for $20 and it ends up being like 40, well, if they have to sell uranium at 60, that's huge. Because then you have CapEx costs after that, and then it's like, oh crap, I've made no money.
Right. Yeah.
So, and I think the other thing that I'm doing with Global is actually looking at what their loan is going to be. Because I think that's the other thing. Because net present value, I'm not a huge fan of net present value analysis because it seems it's very conservative, almost too conservative, I think. Because what I just did in the Global one was I actually broke out what the loan is going to be. And going on forever. I know, I'm sorry.
No, you're good.
And I broke out what that loan is going to be. And, and then from there, what you actually do is you're able to get a bit more accurate with it because you're then able to take like, okay, well, what's your estimate for how much their mine is actually going to cost? This is where we get into the interesting thing about their deal that they had with Niger. No, so the Niger, their government, it went to 20%. So Solmida is the company's name. That's what it's going to be, and they have the Niger government gets 20% of that. So the way that they structured the deal is that Niger will provide a 10% operating subsidy and 10% of the capital cost. So what does this tell us? Well, it tells us that Niger, the authorities there, whoever's investing in it, is not confident that Global's capital cost, CapEx spending figure is as high as it needs to be. So, because instead of essentially, they're getting 20% of Solmida, Global Atomic, DASA, but it's capped at about $71 million, which is about 10% of operating over the life of the mine. So this tells you that Global has a certain internal figure for what they think, how much they think that is a better deal for them. Because instead of essentially, or I think it might be 71, is it 71 million a year, 71 over the life? Either way, Global has a certain figure for, they think that operating subsidy is better for them long term than getting a 10% of the mine cost, because they think that 10% is $30 million. Well, like I said, the cost of the operating subsidy is over the life of the mine is 71. So this sort of tells you how far they think this is, what their internal worst case scenario is for how much the mine is going to cost. You add that back in as your worst case scenario, and then you come up with your interest rate figure, whatever you want to figure out what your cost of capital is going to be. And then you come up with something a hell of a lot more accurate than let's just do net present value. Like, okay. Because that can be, I don't know, when you're discounting all of the cash flows, I get that, because we're getting into my own personal thesis on investment. But anyway, I don't know. I think that's something that's interesting. The interesting part is the structure of this deal to me.
Right.
So I don't know. It's going to be, I mean, $300 million for a mine is really cheap. So it's like, okay, if you could do it, all right. I mean, they signed off on, but even if it's twice that, it's actually not that big of a deal. And you understand that once you actually start figuring out what the cost of the loan is going to be. because I mean, the thing about global is that, this is the other thing you understand in fundamentals analysis. I think in some technicals you get into this too, is that which is share structure. And you have like global that owns like 20% of the company. The management does, the internal. So they don't want to dilute themselves, because then they end up owning like 10% if they have to do it that way. Because it's like what global's at. What is global at right now? They're about 456 million. So if you have to like double that to pay for the cost of the mine, well, then management's been diluted by half. They don't want to do that. So, we'll see where that goes. I mean, I don't know. I guess we'll talk about this a bit more tonight, but because the title of the spaces is like my chasing the bear market rally.
Well, let's talk about that for people who don't know. Your uranium spaces every Sunday night,
yeah. We
8
have
o'clock
that
Eastern.
8 o'clock Eastern time. It's been pretty standard. We keep on going with it here. I'm sort
It's
of
very
amazed.
popular, and you have a great
We
regular
have a
crowd that
following.
comes. Yeah.
I know. If all these people show up,
Yeah.
they
So
hear
for
us
those who
talk.
don't know, who are interested in uranium and want to kind of have more engagement, it's superior in every way to Reddit or any kind of Discord or anything. I mean, these guys are doing a really good job in there, and there's a great crowd. It's a great place to learn a lot and keep up with the week to week
You
action.
know, and we add people as we go along now. I think we've got Austin in the group now, and you have these people that after like 2 or 3 hours of conversation, it's always fun because then you get into like you've just been going through like, oh, here's the news, here's that, and then we start getting into these like really fascinating debates every now and then with someone new who shows up, who helps bring a new perspective that we didn't even think about, and that's really the beauty of it. And then they kind of stick around. Actually, Austin seems to stick around, and so we're having a lot of fun there, and it's I think it's a great space to hang out. So you can find me on Twitter, or you can find Liberty Offensive on Twitter. Again, find you on Twitter, and come and
Come and hang out.
yeah, and I wish people would be less afraid to come up and talk.
Me too. I always wonder because it seems like every time someone does come up, they're generally informed, they're well to do. I mean, these are good people, and it makes you
Yeah.
wonder who's not talking that really has something to add.
Oh, I know. Some people keep things closer to their chest, and because they want to, they're either buying into a stock and they don't want to start talking it up. I mean, I have some news that's coming out about Silex here soon, and I've been told like, can you wait on that like a week? Because this is not like back in May where it's like, oh yeah, we're gonna go up like 150%. That was a fun one. I was happy I was, people, a couple of other people like me and talked about that. And that's the other thing that I'm looking for. And I'm probably gonna talk about this on Tuesday with the Uranium con guys. Not Uranium Con, Uranium Convention.
UraniumCon, yeah.
Uranium, yeah,
Uranium Conference.
it's not a con. This is not a con at all. This is a wise investment, a good market. Everybody makes money.
Are you gonna go dressed up, like you do at Comic-Con? You got to wear your, I don't know.
I don't know. God, I hope not.
Uh,
They have their I mean,
funny. It's fun.
they're fun. But anyway, what was I saying?
The spaces.
Yes, spaces.
You're gonna mention them at the UraniumCon.
I think so.
I think that's what you were saying.
I've completely lost my mind. I'm sorry.
That's okay.
It's all right too. All right. So
Well, look, you've been very generous with your time, Chapman, and I really thank you for coming on. You answered a lot of good questions, and you got a lot of good info in there. And I really hope, for those who don't know about you, learned a lot about you and your depth of knowledge in the uranium space,
yeah.
and will take it upon themselves to go out and follow you on Twitter and check you out at the upcoming UraniumCon. You're a rising star in the uranium space. I'm sure people who
I guess
are going to know a lot more about you soon.
I hope all good things. Yeah. So I do have information on my proven reserves. Like I've got due diligence files on there as well. So if you want to see like my map, I have all the deposits, like sort of down to exactly where they are. Well, not all of them, but they get added all the time. because I'm a very like look at the satellite image kind of guy. And there's a lot of information in there. There's going to be the those cost statements as well as cash flow projections. I'm going to start doing more and more of those, and then there's also going to be the quarterlies updates that, I just need to do those. You get kind of like it's sort of hard to do when you're watching the markets all the time and trying to react to like the latest bit of news. It can be kind of hard to remember to like sit down and actually, okay, it's time to go actually go back to the research, because you're in the middle of research and then something crazy happens. Like, why is that stock up 20%? What the hell is going on? So, but
Sure.
there's a lot that's going to be happening, and I think it's we were talking about the bear markets and all that, and I bought into global again here. I wish I bought it a month ago. It's sort of like, this is sort of like the feeling you can't get mad at yourself.
That's interesting, Chapman, because you've been holding on purchasing for a while now. So what did it for you? You gotta
I
spill the
actually,
beans now.
when I did the cost flow projection, the cash flow projection, it was
So is
like,
it more of a it's
like
worth it on
even
the x-axis?
all right, I'll put it to you like this. At my price for what I bought in today, my
Mhm.
return is 168% is what I project right now. And they have not extended the resource, which they're about to do, and also connected and increased the size of their total resource estimate. So they haven't even done those things yet. And even buying in when I bought in on Friday and I got it on the low, it was 168% return according to the numbers. So that's, and I guess that's 168% as in like 600 and or 750 if you bought it. If you had 300, it'd be 750. So that's,
Right,
I'm
right,
gonna
right.
say there, like not the investment, then it's, yeah. Anyway,
I'll tell you what,
so
let me ask you a little question here, because, a lot of people in the uranium space, they like to post these popular price projections, okay, from these major firms. Do you tend to agree with those price projections? Do you think they're too low or too high?
some of them I find myself agreeing with. I think Global's price projection is one of them that I recently saw. I think near term wasn't it was not a bad one. I think Global could go higher depending on how you value the company, depending on how big the resource gets. They're nowhere near the 10 times maximum resource revenue to market cap potential resource market. Like if you take all the resources in the ground, you magically had them up out of the ground, you sold them for some price, and then you compare that to their market cap, and you do that for the same I have a spreadsheet that you just change that figure, so you put in $65-$70 uranium, and then you can value the companies that way. They're nowhere near that figure, and that's actually usually like NXZ and Denison, they're at like a 7. So is Cameco. The Americans are usually at like a 4 or 5, which tells you how overvalued the Americans are.
Mm.
But you have a lot of the Australian plays, Paladin, Boss, Lotus, even Lotus. Lotus is actually an interesting one. I've seen some, speaking of valuations on the Lotus, you have to think about it. Like Lotus has would have half the production of Paladin, but and for unfortunately they'd have to have about the same startup cost, about 80 million Australian or something like that. Pretty much the same as Paladin, pretty close to it. But their stock is 1/8 the price. So that's an interesting one.
Yes.
Where you are, looking for potential value, I guess. Like, are you going to have a much, higher return because you have a much more concentrated claim on future cash flows? All kind of depends, really. And we've seen some things with like ore sorting and some things like along those lines that can hopefully bring down the cost of some of these more conventional operations. But it all depends. But I have a hard time, you know, I have a hard time. Sometimes my numbers agree with them, but I don't necessarily know how they calculate it. Are they calculating it on like some sort of a technicals measure? Like, oh, this is, we look at this and we think that, the times earnings market volume gobbledygook. I don't know. This is how much I know about technicals. Does that support that price? I don't know. I mean, it's I have basically what I go off of is, I take their statements that they have from their feasibility studies. So for their cash flow projections, and I basically just modify them for certain, you sometimes have to go in, you have to figure out what the royalty rates are and all these other things, figure out what taxes are. Thankfully, I have some experience there. And as well, and then you come up with some figures that, what could they actually do? And it also allows you, as things get updates, those can be updated a bit quicker. So, hopefully those will be able to stay where they are. Like, for instance, if global is going to increase production potentially, it's just something that they're talking about doing in DASA phase 1, then, you'd just be able to go in and update the spreadsheet, and I would have a fairly instant valuation change as to what that might be. So it's nice having this now, so I'll be able to sort of have fresh information for myself and hopefully for my subscribers as well, to know, like, oh hell, this is actually what that valuation now means, because if they have 10% more production, well, we have to figure out what their costs are going to be as well. So we just input those in, and we see how much more that's actually going to mean, because it may not mean much, because if your costs have to go way up to support this additional production, well, then it may not be worth it. So but it's difficult to say, simply because I think there is a little bit of a danger in relying a little bit too much on even what I come up with as far as cash flow projection goes, just because basically, in terms of like cash flow, who's been it? It's Cameco and Kazatomprom. I mean, Boss hasn't been in production. Paladin hasn't been in production. Lotus hasn't been in production. All of these, you have all of these mines that, we don't have actually really any idea as to what kind of challenges, once they get into operation, that they're actually going to face. We like to think that we know, but, and maybe that's a boon for being a bit more conservative on your valuation metrics. But I think, you have to, I think people are best served by having a full model like mine, like something that I'm coming up with, versus just what a brokerage house gives you, because you have no idea how the brokerage house calculated that. Sometimes they tell you, like, they just do pure pounds in the ground or something like that. And but I'm always a little bit cautious there. I mean, it's granted, everybody's I think, going to make some money here, and I think going to make quite a bit of money, simply because these are going to be assets that are just, look, do you want to have do you want to do decarbonization or not? I mean, it's truly the truth. I mean, these little pinwheels for adults, just don't do them. Because guess
I
what?
love the video I saw the other day, and it's just a field of these things, and they're on fire and they're spinning.
Thank God.
I
We're
drove
doing something good with them.
Yeah, we drove through Southwest Texas not long ago, and we went. There's fields of these things, and half of them aren't even turning.
Yeah. It's like, and if they're not turning, they're not in production.
Yeah,
it means it's just wasted asset.
Or they're missing a blade or 2 or 3.
Really?
Oh yeah.
Oh God, take a photo. I want to see that.
Oh yeah.
If you can while you're driving, I don't know. But yeah, that's unfortunate.
Well, it is unfortunate. I think
I mean,
they
so
need a lot of repairs.
Well, so much money's been spent on them that it's just, I don't know. I mean, they work well with natural gas, because you can spin up natural gas pretty quickly. Spin it up, spin it down. And that's sort of the issue. The issue ultimately with renewables is that you have to basically build your system twice. We're now talking about, having battery backups. Oh, that's great. Now we're going to build the system 3 times over. Because guess what? If your battery backup is only 24 hours and you have like 2 days of just kind of a solid storm, that's not good.
Right. And now they're finally acknowledging we don't even have the raw minerals, materials to make all of these batteries. We don't have it.
I've seen various projections on that. The most optimistic one I see is that we just have just enough.
Yeah.
Okay. All right, just enough. But the materials throughput for this supposedly green technology, and it's and this is sort of I'm much more pro mining than a lot of my other compatriots in the nuclear space, simply because you have to have minerals
Yeah.
have modern society, and I would much prefer to get them, as much of them here as I can. The thing about the United States is that a lot of our uranium deposit, we have a lot of uranium because we're a big country, but it's all just kind of low grade. So in terms of like actually trying to make a lot of money on it, let's just get it from Canada.
Yeah. Well, even if you have just enough, how do you grow? Right. That's what energy is for, is to grow. And so,
yeah.
I mean, why even start the endeavor?
Well, how you grow is the thorium cycle, because we have a fairly substantial thorium deposit in Idaho, and it's actually concentrated and it's all in one space. And the United States and India are basically the 2 countries that have the major thorium reserves. And it is sort of interesting that we didn't go down the road of thorium. And we probably didn't because of the legacy of the atomic program. Whereas, we were trying to basically make plutonium, and getting from thorium-232 to plutonium-239 is, I don't even think, possible. So, pretty sure that's not possible. So that's why, we would, and the uranium fuel cycle was just a lot less technically challenging. You don't have to have like breeder reactors where you're constantly having to sort of make thorium into uranium-233. And that was, that costs more money, and it ends up even here, but the thing is, like, most of our uranium deposits we're either not looking for them hard enough to the point where we're trying to find more of them. But I don't know. I think we'll get some production. I think Peninsula and I think URG are going to be fine. I think they'll make some money. But I would have, if you're looking for like 5 or 10 baggers at this point, you're going to want to be in Africa. So that's where your money needs to be at this point. Because it's still cheap, So even Australia, like even Boss, even Paladin, even Alligator. I mean, you're just looking at some of these companies that are moving around over there. We'll see where they go, but yeah.
Well, how about you participate with me, inspired by the gold and silver spaces, the lightning round?
Okay, cool. All right.
All right. All right. And you got to be on your toes. I don't have a buzzer yet.
Oh, sure.
I don't have music yet, but it's just as fun.
Okay.
All right.
Let's do it.
Okay. So here you go, Chapman. Who is the best investor? Warren Buffett or Nancy Pelosi?
Warren Buffett.
Okay. Most gains will come from traditional mining, SMR, or your enrichment.
Enrichment.
Okay. President Joe Biden is more likely to sign a pro-nuclear deal, or he's more likely to sign way, way, way too much solar.
Way, way, way too much solar.
Okay. Lord of the Rings or Game of Thrones?
Oh, Lord of the Rings.
Lord of the Rings?
Oh, yeah, yeah.
Oh, no, yeah. Lord of the Rings or Star Wars?
Oh, God. Sheesh. I'd have to go with Lord of the Rings.
Oh, I'll have to defer that to the judges later.
Yeah, I know. I'm sorry.
Okay. Would you rather own a lightsaber or a laser blaster?
Ah, lightsaber.
Okay. Which would you prefer? You said you bought global.
Yeah,
All right. Would you rather snap your fingers and have them double their resource or half their costs?
double the resource.
Okay. Who's going to be the biggest loser in the uranium equity space?
Energy fuels.
Energy fuels.
Oh, yeah, don't get their market cap.
Yeah. Okay. All right. Let's see.
Everybody,
What's
people will wake up for that one eventually. It's 1.1 billion. I just looked at it. It's like, dear God.
which spot price has more upside? Oil or uranium?
Uranium.
Okay. Uranium or silver?
I would probably say uranium still.
Okay. How about, I'll tell you
Everything
what,
is
skinny Elvis or fat Elvis?
skinny.
Skinny
Yeah,
Elvis?
I
Yeah.
think so.
Okay. Well, look, Chapman, I'm really happy that you took the time to come on today. You were a great guest. A lot of great answers. And
Oh, good.
thank you for coming in.
Yeah, no problem. I'll see you later, of course.
Okay.
Always a pleasure. So,
All right, buddy. Take it easy.
you too.